Good morning and welcome. Petro Radio News Hour on this Wednesday. Joe Jake went solo today. Jason's taking the day off. Hopefully, we'll see. He may be back tomorrow or Friday or, maybe Monday. It's kind of the dog days of summer. But let me tell you, you just can't rest. You can't sleep. You can't turn around for a minute. The year of chaos, the Japanese yen exploding to the downside today, setting off more currency intervention fears. How much money do they have? How much can they intervene? Is it all going to matter? We had special elections yesterday. Tonight, tomorrow. The presidential debate, all eyes will be on that. I don't know if I'll watch it, but most people will at least casually pay attention to it. We get jobless claims tomorrow. That's going to be the big number. I expect it to stay in that 240, maybe even 250,000 range. And then I think yesterday I said CPE tomorrow. No, CPE's Friday. So that's going to be kind of the big 2 days, Thursday and Friday this week, as we watch the year of chaos continue to unfold out there. Our toll-free number, 800-951-0592. The website at allamericangold.com. And we've kind of got this pattern happening in gold and silver, right? It gets high, silver gets to like 31. Gold starts threatening 2,400, then it sells off, back to, gold 2,300, silver, in the 28s, and then comes right back again. I think that's probably what we're going to see tomorrow, but it'll all depend on what happens with the Japanese yen now hitting the lowest you got to go all the way back to 1986 before you find a lower level for the Japanese yen. We know they did over $60 billion. They intervened in April. They've intervened in May. Looks like they're going to they were trying to, I think, maybe get out of June without having to intervene again. But we'll have to see, as the yen is almost at a 40-year low, and the next low after that, you're going to be looking like 1984. So that's kind of where the next lows will be. And, of course, the yen had a huge move up until, remember, they had that horrible stock market crash in the 80s, and it took them, it took till now for them to get back to where they were almost 40 years ago. Of course, this is what inflation does, and now we have more concerns, don't we? How much debt can really be afforded to be gobbled up here? It's obvious that Japan is going to have to sell more treasuries. They also have some euro bonds, right? They're probably going to have to sell those as well to try to keep the currency from depreciating any further. There's some thought that they may wait till Friday, right? And hope, as an example, hope the U.S. jobs number is really bad, right? Jobless claims, right? They would love to see 250, 260. I don't think that we'll get that. We'll see. But then the PCE on Friday, I think that's going to be very, very important. If it comes in as expected, I'll say this. I expect gold and silver to have a good day. But if it, goes to the high side, then you're probably going to see massive intervention by the Japanese, if they wait that long. We'll have to wait and see how long they're willing to wait, as their currency right now, 160 163, and it's something where 160 was kind of that line in the sand. All the Japanese have been out talking, oh, this is unwarranted and all this other stuff, and this is market speculators. No, here's the reality. They've been trying, just like our central bank. We talk about it a lot, right? Price discovery. This is what markets are for, right? What is Wall Street? It's price discovery. How much is something worth? The problem that we've had is these central banks don't want price discovery. They don't want you to know the real truth behind it all. And this is the problem that Japan is facing. Everybody knows it. They really have no good choices. They have to raise rates, right? Which would, the illusion that you're stronger than what you are. But Japan knows, guys, if we raise rates, we're going to wipe out all of our banks. We're going to wipe out our own central bank. Because remember, they've been buying all this debt. Japan had negative rates. Think about that. So they've got the same problem we have, just much worse, because A, they're not the reserve currency. B, nobody wants it anymore, right? And so then that leads you to what is going to happen now. What is going to be the domino that starts knocking everything down? And that's one of the things that we keep talking about. There's so many of them. Could it be Japan? Yes. Could it be France? Yes. Could it be Italy? Yes. That's the other thing, right? The French election, that's coming. Is that tomorrow as well? I'll have to check on that. It's another one to keep our eyes out for. When we get back, how is the U.S. economy? Yes, it's slower. How slow is it getting? Some of the biggest CFOs in America sounding the warning bell. All of that coming up next. 800-951-0592, Patriot Radio News Hour here on this Wednesday. A quick look in at the markets. The Dow's down 100 points. The S&P's down 12. The NASDAQ is down a couple of points. The 10-year note, all of a sudden, 432. And again, I think worries that Japan is going to be dumping treasuries onto the market here. We'll talk a little bit more about that in a little bit here. Crude oil, $81. Gold's down right now, a dollar strength, right, as the yen just kind of collapsing here. Big buying opportunities today, but right now gold's down 20. 2302. Silver is, silver's fell yesterday. Actually, it's hanging in there today, up about 8 cents right now, 28.86. We kind of seen this pattern in gold and silver. If you're looking to try to buy near the bottoms, today will probably be a good day, especially if we get the jobs numbers we think we're going to get tomorrow, the jobless claims numbers tomorrow, and the PCE on Friday. We'll get to that a little bit later in the show. We'll give you an opportunity to buy at these lower prices. But remember, what are we preparing for? What are we getting ready for? As we see all these signs, all really globally, about bubbles starting to burst, central banks and currencies, countries, cities, right, states starting to buckle under the weight of all the debt and all the money creation that has occurred out there. You need to be the most diversified you possibly can. And obviously gold and silver, you got to have it. The more you have, the better you're going to be. But that's why we keep telling you about our friends over at YRefi, right? If you got $50,000 or more, up to 10.25% fixed rate of return, not correlated to Wall Street. Doesn't matter. What if the Japanese yen implodes? What if they can't save it? What if it goes back to 250? Because that's where it was in the early 80s. Right? What if it goes back there? What is the effect of that going to be? What if we have a situation where, remember the pigs, right? Now it's the effing pigs because France is now on the list, right? Over in the Eurozone. What happens if the U.S. economy continues to keep slowing? And the news today, not very good. We'll get to that in a minute. But when it burst, remember all the rules that have been put into place. It is much different than 07 and 08. Because that was bad. We all know that was bad. It was bad. Didn't need to happen, but it did. And then they instituted all of these economic policies that, quite honestly, is nothing more than a giant Ponzi scheme created by the central bank. And the illusion that they fixed it. And really, how did they fix it? Well, they just put all of us on the hook. All of us. You got money in the bank, you're on the hook. Got money in the stock market, you're on the hook. Bond market, on the hook. Money markets, on the hook. Make sure you're not going to be on the hook. Check out our friends at YRefi. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YRefi24. So before we get to the CFOs, we had we had some data out today. Rue 21, the mall retailer. Get ready. It looks like I see a major amount of closings here. They're asking for up to 50% off rents in an attempt to be like, hey, either give us these massive rent concessions or we're going to have to close up. General Mills, sales down 4%. As they say, the consumer continues to struggle with higher prices. And then Southwest Airlines saying, well, Boeing, they can't build these dang planes. We got a lower revenue forecast again. But the big news, new home sales. So we knew existing home sales, right? They've been down and out. New home sales has kind of been the bright spot. That's ended. New home sales was expected to fall 0.2% in May. It didn't. It was down 11.3%. That's the biggest monthly drop in a couple of years. They're saying that now that the rate of new home sales fell back to 2016 levels. By the way, the median home price, it did fall. So maybe a little bit of good news, not a lot. 0.9%, $417,400, the lowest since April of 2023. The average price was kind of, the bigger price. The average price, by the way, $520,000. And it is now the first time since June of 21 that the median home price of existing homes is now above that of new homes. The U.S. housing market is stuck. By the way, here's the part that I think was more disturbing. Supply of new homes. Another big jump in new home supply, 481,000 new home supply. That's 481,000 new homes that are ready to be bought that have not sold. By the way, that is the highest levels since 2008. So it's going to be interesting here. I don't know. Housing has been extremely resilient, but it does appear that is it possible that the housing market is going to go into a downward spiral price-wise. We'll have to wait and see. I don't know how far they can fall. That's kind of the thing, right? I mean, it's so expensive to build these things now. I think the one thing that we'll have to watch for, because obviously this is, May, that's like the prime selling season. Are we going to see home builders slow the pace? Are we going to start seeing layoffs in home builders? I don't know. Too early to tell. But a lot of CFOs had come out over the last 48 hours, starting with Walmart. Walmart CFO warning at a conference to investors that the second quarter will be the retailer's most challenging quarter of the year. He's not alone in this. And when we start looking at the CFO survey, which just came out, over half of the CEOs surveyed said consumer demand was a problem where they are at. So when you're thinking about who answers these surveys, these are the big, publicly traded CFOs saying, yeah, we're seeing slowdowns in the consumer. Matter of fact, calling it the biggest external risk to their business. So still, here's the thing, too. Not only are they worried about consumer demand, rising prices in recent quarters, evidence from across all market sectors, whether it be fast food, car dealers. Boy, the car dealers. Did you guys see that, hear that about there's this software system, I guess, that most car dealerships use that got hacked. And they can't even repair cars, sell a car. But 54% have said consumer demand was their biggest risk. It was 18% a year ago. It was 37% last quarter. So this is big. There's been a big move now, and CFO saying that the consumer is really starting to have problems here. And this is why we'll see what this jobless claims number is tomorrow. I think that's going to be a very, very big indication. 38% still expect rate cuts from the Fed in September. 29% don't think any rate cuts coming this year at all. So those are the top two positions. One other thing that was kind of interesting in that survey, they think Donald Trump's going to win. They think Donald Trump is going to win the presidential elections. I guess we'll have to wait and see how that plays out. I don't know. I think they took it from him last time. Why wouldn't they do it again this time? But having said that, remember what I said yesterday. I feel bad for whoever it's going to be. The math just gets worse. I think that's the thing for most of us. Why am I so negative? Whoa, Joe, you're doom and gloom. No, I'm not. I'm not doom and gloom at all. I'm just telling you what's coming. I don't want it to come. I'm not guessing. This is just the realities. Bank of America yesterday, think about what they said. Gold's going to be average $3,000 next year. Average $3,000. It's going to be above, right? At some point, gold, how far above? I don't know. Why? Well, the Treasury market's in trouble. We wake up this morning, next thing you know, here comes the Japanese yen implodes again. How many more treasuries are they going to dump? How many can they dump? That's the other problem. When are they out of bullets? I think, and everyone's different. They maybe have a couple $100 billion that they can, I guess, liquidate. And then after that, it'll be a problem, a really big problem. So how many more, if they're intervening every single month, right? Remember the last intervention, $61 billion. You barely get out of the summer. San Francisco Fed President Mary Daly. Boy, you know what? And, of course, she's probably worried about what's been going on in California. She warned the U.S. labor market is now at the inflection point. Further slowing will mean higher unemployment. Now, she's a voting member So her comments have a little more weight this year because she has a vote. And obviously, I think she's leaning towards rate cuts, talking about so far the labor market had adjusted slowly and the unemployment rate has only edged up a little bit. But we're getting to the point now that the benign outcome will be less likely. Future labor market slowing will translate into higher unemployment as firms need to adjust, and not just vacancies, but actual jobs. So what is Daly talking about? She's saying that a lot of these companies out there, okay, well, we're not going to fill positions, right? We had job openings. We took the job openings down. We're not going to hire that extra person. Now she's saying, no, it's changed now. They're telling me now, hey, we're actually going to have to start cutting bodies, so we'll have to see. My guess is, does she know what the number tomorrow is going to be? That'd be my guess. I don't know. But it's interesting that she made these comments last night. So it's one of these things where, again, so many different things to worry about. New homes and the fact that they have that much inventory. Are we finally going to start seeing prices come down on homes? I don't know. Don't know. But will it matter if Daly's right and all of a sudden here comes the unemployment? Remember what I told you. When will inflation go away? Yeah, when people lose. 510-592 Patriot Radio News Hour here on this, what day is it? Wednesday. On this Wednesday, Joe Jacob went solo today, but a great opportunity. First, let's start with silver. So we've been talking about pre-1965 dimes and quarters. Silver pulled back yesterday, kind of holding steady here today. If Daly's comments are right and we get a number 240, 250, I think you're going to see gold and silver move in that positive direction. And then everybody's, at least from what I'm seeing, everyone's anticipating the PCE number on Friday to be lower. Right, so the inflation number, of course, PCE just essentially means we're not really tracking inflation. This is called really smart people inventing cheap inflation, that this number is going to be lower. If that is true, you will think that we'll probably see gold and silver respond in kind, but a little more affordable today. Rolls of silver quarters. Yesterday they were $230. Today they're $225. Buy 10 rolls or more, $220. Rolls of silver dimes. They're at $112.50. Yesterday they were $115. Buy 20 rolls of dimes, and you'll save another $250 down to $110 a roll. And then on the gold side, and this is probably going to be, we talked about, man, those $10 liberties, you guys just killed it. Just killed it. The need probably for more fractional gold as the price of gold continues to climb. We have a lot of people out there that this is how they supplement their Social Security. Hey, I'm going to sell a $20 gold piece every month. We have tons of people that do that because they were smart. If you're talking about, well, what's the minimum amount of gold I should own? Well, it should be at least an ounce for every year you've been alive. Every year for you, every year for your wife. So you got your husband and your wife. They're supplementing their Social Security. Well, we're going to sell 220s. Well, now all of a sudden, like, hey, I don't need that much. Right? And imagine, at $3,000, $4,000 gold. Now all of a sudden, well, maybe I need to sell just a $10, maybe a $5, right? A quarter ounce. That is something where I could definitely see that happening here in the very near future as gold prices continue to elevate. A big opportunity, $5 liberties today, $640. I don't care how many you buy. Volume discounts for everybody today. So usually the more you buy, nope, I'm going to just take it all the way down, $640 on $5 liberties. One of the closest prices to spot on a quarter ounce you're going to find out there at 800-951-0592. And keep adding here, especially when we start thinking about where's gold going to be in the next 3 to 5 years. And I mean, pretty much all the banks have conceded 3,000 in the next 12 to 18 months. I mean, are we going to be, is it going to be 5,000, 6,000? I don't know. If there's a currency disaster, which may be unfolding in Japan, could it be something significantly bigger than that? Remember, Bank of America yesterday were one shock away from the treasury markets not operating properly. And then a big article out yesterday about where is all the gold going, and saying that, hey, we're looking at central bank gold buying. Remember, we know that the central banks don't have to say if they bought gold or not. They don't have to. Matter of fact, and they can lie. They can lie and understate what they've been buying. Last week, rumors were that Saudi Arabia has been buying gold and just not saying it. Right, and we know that Saudi Arabia now has gone into the Bank of International Settlements payment system, which would allow it to sell oil in something other than dollars. Now, some people say, well, they always had that option. Yeah, but they never did it. Up until last week, you could only pay in dollars because that was the only way they were set up to do it. Now, that has changed. But there's even more speculation that Saudi Arabia by itself cannot be making up the difference. And there's numbers once again pointing back to China that they are significantly underreporting the amount of gold they're buying. So when they go back and look at last year's numbers, so 2023, we can track the amount of gold that got imported to China. It was 1,400 metric tons. 1,400. Now, China, they're the largest gold miner in the world. They're down to 375 metric tons of mining. So that's a 50-ton drop in the last 5 years in gold mining in China, but they're still the largest at 375 metric tons. They don't export any gold. China exports no gold. Well, that would be 1,775 metric tons. And when you start doing the math, you see that retail-wise, retail buyers, now granted, these are numbers from China itself, and big commercial banks, they bought 431 tons of it. That's what China said, of the 1,775. There's 1,300 ton gap in the numbers. And when we start looking at what China said their central bank bought, well, that was like, I forget the official number, but it wasn't a huge amount of gold. It wasn't 1,300. It wasn't 1,000. I think it was like 300 or 400 metric tons. So what the question really is did China really add another 1,000 metric tons behind it and just not tell anybody? It looks like, according to the data anyway, that's exactly what happened. Is there something bigger in the works behind the curtain that we don't know about? It sure appears that way. Patriot Radio News Hour will be back after the break. 800-951-0592. The special today, $5 Liberties, 1866 to 1907. That's that private gold we keep talking about, quarter-ounce gold. Just an incredible price today, $640 today. And, you know, if you look back, I think, Arlene threw them all away on me. I was going to tell you, I want to say this time last week, it was like $6.90, so it's a big drop in price here. Take advantage of it on these $5 Liberties, and it's going to be great, especially, you know, 3, 4, 5 years from now. Hey, I need, you know, $1,500. I'm just going to sell a $5 gold piece, right? You know, and instead of, well, gosh, I got to sell a 20, even though I need $1,500, right? See what I'm saying? Get them here, fractional gold, a great opportunity. 800-951-0592, and then, of course, the pre-1965 rolls of silver quarters and dimes, $225 on rolls of quarters, 10 rolls or more, $220. Silver dimes, $112.50, 20 rolls or more on the dimes, $110. Again, 800-951-0592. Now, why are we focusing in on China today? Because I think we're in for a very big surprise, and it could be coming as early as next year. Here's what we know. Things that cannot be disputed. Between what China imported and mined versus their actual reporting over the last 2 years now, we have a huge difference of about 2,700 metric tons. Now, there only can be, now in full disclosure, every year there's always a little difference, but it's usually small. Maybe there's a 100-ton difference, 200-ton difference. We don't see this type of difference. This is enormous. Now, there's a couple of possibilities here. First and foremost, is China buying more gold than they're telling us? This has happened before. Most people don't remember. But in June of 2015, the Bank of China announced a one-off increase of 621 metric tons. In other words, all of a sudden, oh, by the way, hey, we've been lying to you guys. We actually own another 621 metric tons. This was the last time we saw big discrepancy. And listen, this discrepancy was nowhere near this big. It was off by like 1,000 tons, not 2,700 tons. For my money, this is probably the case. We're probably at some point going to get an announcement from China that they own, and I don't know what the number is going to be, but are we going to get a one-off of like 2,000 tons at some point in the future? That's my guess. I don't know, but that's my guess. Why? Because this is what China's done before. And it's the same pattern. We'll get several years where the math just doesn't add up, and then China admits, okay, well, we actually have more. Could you imagine? What would gold do on a day where China announced we've got 2,000 more metric tons than we told everybody? The second possibility, and I think It's probably a little bit of both, because I think a little of this is happening. It's the sovereign wealth fund of China has been buying gold. And we've seen that with other countries that maybe don't want to admit or publicly say our central bank is buying gold. They're using their sovereign wealth fund to do it, right? And that's, I think there's a possibility that some of that is there. Last but not least would be China's just lying about how much, because China's banks hold gold, unlike our banks. They hold gold. A matter of fact, I want to say their last reporting, the big banks in China report that they have over 1,000 tons of gold in their vaults. That could be underreported, right? Their banks could hold more gold, or the citizenry of China is buying a lot more gold and they're just lying about it. But when I look at those three possibilities, it's the first one that makes the most sense because we've seen it before. The sovereign wealth fund, I think, could have some, but this is an enormous difference. 2,700 metric ton difference when that number should be like 300. So that's a lot of gold that is being either underreported or most likely hidden, and I'm anticipating at the, and I would say this, probably during, as a financial crisis is unfolding, that you could see China come out with a one-off announcement like this to take a power play at the dollar, right? Could we see, we already, the list of nations that want to join BRICS, I'll see if I can find it. It's exploded. It's incredible how many countries want to join in. And with an announcement like that out of China, could China come out and just say, hey, I know we told you we got 2,300 metric tons. We really got double that, right? Hey, we've got closer to 5,000 metric tons. I think it's very likely. 800-951-0592, Patriot Radio News Hour. We're going to 800-951-0592, final segment here on this Wednesday. I'm going to say by far the best day to buy today. I think we're going to get some dovish news over the next 2 days, and we're going to see the same pattern that we've been seeing in gold and silver over pretty much since going back to mid-May here. The same pattern where gold will sell off on no news, right? Because there's really been no news this week, and then of course here comes the important data points and looking at especially too. If they want to help Japan right now, it would be something where if those numbers come in higher, jobless claims higher, inflation lower, as the Japanese the yen now approaching 161. So we'll keep watching here. But I think all signs point to a bottom here. $5 Liberty gold pieces, $640 right now. Just a great bargain, especially, seeing, hey, are we going to see 3,000, 4,000, 5,000, 10,000 gold, 20,000 gold, right? All of a sudden, that's a great piece to own when you were looking to, hey, I need to supplement my income or whatever it may be. At $640, and of course the rolls of quarters, $225. 10 or more rolls of silver quarters at $220, and the dimes $112.50. 20 or more, $110 at 800-951-0592. This week we already heard Malaysia and Thailand want to join BRICS. BRICS membership request now. Over 50 nations have now let it be known that they want to be a part of the BRICS system. And when we start looking at the data, we know how much gold went into China. We know that. That's a known number. Over the last 2 years, roughly 3,600 metric tons of gold between what was mined and what was imported. China does not export any gold. When we go through and look at what they reported, there's a 2,700 metric ton difference over the last 2 years. More than likely, this is going to be a repeat of what we saw the Chinese do almost 10 years ago. Now, back then, the difference wasn't that big. It was about 1,000 tons, 1,200 metric tons. And they came out and said, oh, by the way, just out of the blue, oh, we really have 620 more metric tons than we told you about. I feel like we're getting ready to see that, but the difference will be the number's going to be much bigger this time. Is it going to be 2,000 metric tons, 2,400 metric tons? I don't know, but I feel like that is one of those numbers that is going to come that nobody's talking about, right? They're already saying 3,000 gold as an average price in 2025 without some type of bomb by the Chinese that they own thousands of more metric tons. It's just something to be, we don't know, but it just kind of, history tells us that's what they like to do. 800-951-0592. Patriot Radio News Hour. I'm wrapping it up. I'll be back with the half-empty cup. Oh, it's going to be a good one, I think. We're going to talk Julian Assange in Oklahoma City. Why doesn't the FBI want to tell us what happened? That and much more coming up.